Okay, so how is the market doing? Okay, so this tab here, I keep track of the main stocks. I can add some if you want, and this is just how they're doing year to date. So on 1/1/2025, these are the prices, and these are the prices as of 6/6. So the S&P 500 is up finally for the year. It was down for a while, but it has come back the past couple of weeks. So now it's up 2%. But the best stock on this list is CVS, which is surprising. CVS got pretty low. It was 44 when the year started. And I know it was a lot higher than that at one point. Let's see. Let's go back. So it's all-time high. You have to go back to 2015. Looks like 110, 112. But even back in 2022, it was over $100. So it's really struggled. And at the end of 2024 was below 50. And CVS below 50, you'd have to go back to 2012, 13 years. So it's it would have been a great time to pick it up below 50. I mean, it's hard to time these things perfectly, because when a stock is over $100, I mean, it's a good company. Then when do you buy it? When it hits 80, 60, 40? You just don't know. But if you, I guess, dollar cost average, you could have done well. Of course, if you didn't know this was a top, it could have ran up to 200. Lots of stocks do that. But this would have been a good one. This year, it's done really well, up 31%. The worst on my list, I could add, I'm sure there's a lot worse stocks, but Tesla is down 28% for the year to date. So that's really struggled. Apple's down 19%. I haven't added any Apple to my portfolio, but I was adding Microsoft pretty aggressively in 2024, maybe a little in 2025. So finally, it's paid off, because Microsoft was kind of struggling this year. Gold is up 20%. Netflix is up. Netflix is killing it. One of my portfolios is pretty heavy Netflix. I could show you what I mean. So I have two main portfolios, and this shows you how this portfolio does. Netflix is part of this portfolio compared to the S&P 500. So it's up 4.6% for the year to date, while S&P 500 is up 0.5%. What did my chart back here show? This is 2%. So maybe this is a day or two off from this. This is from E-Trade, because in E-Trade, you can see how your portfolio is doing compared to the market. And you could pick different indexes. Like I just picked S&P 500, but you can compare your brokerage account to anything, like the Dow or whatever index you want to compare it to. So you can see my account in January was up 4.5%. And by March, it was down 5.8%. And the market at its worst point, the S&P 500, was down 7.5% in April. But it's come back. It had a great May and a pretty good June. It went from down 7% in April, year to date, and then in May it was down 1%. So of course, when the market is going down like it was in March, everybody was saying, even, I mean, in April it was down 7.5%. People were saying the world's ending and get out of stocks. It's going to be worse than the Great Depression. They do that every year. Every time there's a pullback, it's always the same thing. The market is volatile and it's going to be terrible and get your money out, save your money, but it always comes back. I mean, this came back in what, 3 months? Sometimes it comes back in a year, but it will come back. I mean, it's impossible not to. In the US, that is. I mean, in other countries, you can have a bear market probably for decades, but in the US, it's just such a thriving economy. And in this particular portfolio, this is a snapshot the past 5 years. So I'm up 63%. This is all my accounts. I have Netflix, Apple, and the S&P 500 is up 63% 44% in the past 5 years. So there was points I was probably trailing S&P 500. I mean, I'm sure I could find it. Not many, actually. This is from June 2022 to June 2025. So it's the past 3 years. So in so I guess 9 months into this portfolio, I was down. I'm trying to find where I'm trailing. I guess I'm always beating the S&P 500. I just got lucky, I guess. Just okay, 3 months into this portfolio, I was down 9%, but I was still beating the S&P 500. So I guess I'm always, well, in December. In December, I was worse. So when you compare June to December, so 6 months into this portfolio, I was down 11%. S&P was down 8%. And then in March, I was down 2%. S&P was down 1%. And then I was up, beating the S&P 500. So that turned out well. AB, what's up? That's one portfolio. And my other portfolio, you don't have to compare yourself to the S&P 500. You don't have to compare yourself to anybody. I'm just showing you that I'm not just talking. Like I do have decent results. Of course, I wish they were better, but whatever. So year to date on my other portfolio, so far I'm up 8% for the year, mainly because of Meta, because Meta's doing so well. I have a lot of Meta and Berkshire, and the S&P 500 is down 0.5%. So far this year, I'm always beating the S&P 500 in every time period. At one point in February, I was up 9%. The S&P was actually down. March was even better. And if you compare, I have explosive diary. Okay. Are you the guy who always makes those comments? I guess that's funny. And then in the past 5 years, the past 3 years, in this E-Trade account, this takes all the stocks within this particular E-Trade account. So right away, I was down 9%. S&P was down 6%. And then I was beating it from then on. So in the past 3 years, this portfolio is up 67%. S&P is up 44%. But I mean, I don't spend all my day doing due diligence. I just try to find companies I think make sense and just hold, not sell. I mean, I don't think there's any magic to it. I'll never I don't know anybody who crushes the S&P in the long term. Even Warren Buffett, he beats the S&P, but he's not like the S&P is like up since he started his fund in the mid 60s, S&P 500 is averaging like, I think it was like 12% return a year on average, and he's averaging like 18% or something. But and it doesn't seem like a lot, 18% compared to 6%, but when you compound it, I mean it's massive. But I mean, I'm happy to go through my portfolio. I know some people like that, but I don't really need to. We could try to talk about other things, like if I could do a DCF on a company. We can take a look at would you hold Apple if you had it for years already? Would I hold it? I mean, I do have it. I mean, I don't have that much Apple, and there was a time I was like, why didn't I put more to Apple? You know, I mean, it's, you know, it was a not a, not a good investment. I only have it here. Apple, I did sell it around COVID. I probably shouldn't have sold it, but so my Apple, I only have $38,000 worth of Apple in all my portfolios, and it's up 180%. But for a long time, it was up at one point like 250%. So for a long time, I'm like, everything was trailing Apple by far. So I was like, why don't I just put more to Apple? But now my Netflix is up 220%, and Costco is beating Apple, and Costco has paid pretty nice dividends. I got a really big special dividend, so it's worked out. Because sometimes it's funny, because I know this happened to you. Like, you'll buy a stock, you'll put like $10,000 into a stock, and then this happens all the time with me. Like, I put like 10,000 into a stock, right? And then after a year, I have that stock is worth like 12,000. So I'm like, okay, I'm up 20%. But there was another stock I wanted to buy, but I thought it was a little risky. But I would have had like 21,000. Why is it so small? And I'm like all annoyed. I'm like, why don't I just invest in that stock? I could have had 21,000. But then, say 5 years later from my initial buy, that 10,000 is like 32,000. And this stock that ran up so much is like down to 8,000. And I'm like, thank God I didn't invest in stock B like I wanted to. But at one point I was annoyed, and I was like all pissed off all the time. Like, oh, when I just put in this stock B, I was about to do it, but instead I went with the safe bet and went with stock A. But then if you wait long enough, usually, not all the time, but usually you find out like you made the right move. But it's hard in the moment, and you don't know what the future is going to be, and you probably wouldn't have sold it, like stock B. Like, say stock B doubled after a year, you probably wouldn't have sold it and put all that money into stock A. You probably would have just wrote it out, because it more than doubled. So most people, when they do well in a stock, they either hold it or buy more. And when they do bad on a stock, they sell it. Do you like, my Roth IRA is up 5% year to date. Shit, I drink so much water. I'll be right back. I was thinking, and what do you guys think about this? Like, say, um, I was thinking if I could go back to like when I was 18 years old, and I know everything I know right now at my age, but I went back to 18 years old, which is 30 years ago. Um, I was like, I could definitely be a billionaire. Like, there's no doubt about that. But the reason I think I couldn't be a trillionaire is because even though it's kind of like Warren Buffett's theory on investing, because when you have a small amount of money, you could make massive returns. But once I get to like say I accumulate up to like $100 billion because I have so much information. Like I know I buy a ton of Bitcoin, I buy a ton of like Amazon. Um, but once you get so much money, like say you have $100 billion, you can't like Nvidia is kind of late at the game. Like if you went back 30 years, you wouldn't invest in Nvidia. You'd wait probably till like 2015 or 14 or whatever, because there was no run up and wasn't even around, I think, 30 years ago. But like you can't just drop 100 billion into Nvidia and it like say Nvidia went up 50x from 2015 to 2025, probably went up more. But if you dropped 100 billion into it, you would move the market. You would be so your people would be looking at you, and you wouldn't be able to you wouldn't have the same results, if that makes sense. It's kind of like Back to the Future, when Marty, what's it called? When Biff goes back and gives a gambling book to that guy. That guy kind of like his decisions dictate a lot now. Where right now your decisions as a retail investor don't dictate anything. So like if you knew tomorrow there's going to be an acquisition tomorrow that nobody knows about except the insiders of the company, but you're psychic and you have that inside information, you can just put like, you don't have billions of dollars, obviously, but say you have 50K in cash and you have 20,000 in credit cards, so you can just drop 70K into that company, and it triples once they announce the acquisition. So you would have 210K. But if you had like $100 billion, I mean, especially if the company's only worth 100 million, you can't just put 100 million in the company and buy the entire company. So that's why I don't know if I could be a trillionaire, even if I had all the information in the world, because maybe if I did other things like did gambling, like sports games, because your bet on a sports game shouldn't influence a team's play. It's kind of independent, but the stock market, there's a lot of correlation. Like when Warren Buffett puts money into a company, that changes things. So you're Shadow Guy, what's up? AB Ba, it's just not. I don't know. It's just not funny. I know you're trying to be funny, and I don't want to be like. I don't know. You always make these comments, but whatever. I guess you do you. Do you? But throw out some tickers. But what's your theory on being a trillionaire? Like, do you really think it's possible? Like, if you went back to when you were 18 years old, because if you were 18, say it was even like, just to give you an example, I think there's 21 million. Okay, there are 20 million Bitcoin. Okay, so that Okay, so this is a total number of Bitcoin in the world. I mean, it's not at 21 million yet. It will be at 21 million at one point. It's close to 20 million. So price of Bitcoin in 2005. You can't even get a price. It says 0 because it's rounded. 9 cents in 2000. I want to find out when it was really low. Images. Okay, maybe Doge is better because it actually shows a number. Okay. Let's look at the Bitcoin. Okay, 2015. So you can't even see it on the chart, the number. Okay, let's see if I can do a date range. It was 220. Okay, maybe Doge is a better example for this. Because Doge was real low. I want to find something that was like well below a tenth of a penny so we can scale it. Okay. Come on. Okay, let's see in 2018. Unless it doesn't work. Okay. Why? Okay. Okay, so here's a low. So it's 0.002 for one Doge. One Doge. So say you knew what Doge was going to be. So what you did, like you went back to the future, and the peak was when Elon went on SNL. It hasn't hit that peak yet. So it got up to 57 cents. So let's just. So that was the peak. Okay, count. So if you bought 100 Doge in what year was it? 2012? 2018. 2018, and the peak was 2021. So it's only 3 years. So that's a good one. So it's only a 3-year way up. Because you can't become a trillionaire by buying Amazon and waiting 25 years. I mean, you could, but in order to become a trillionaire, you need these huge jumps and then plow money into another huge jump and so on. I just want to prove a point. So how many Doge coins are there? So 150 billion. Which is a lot. Wow. Max. Okay, right. So in 2018, if there were 150 billion Doge, I don't know if there were that many back then, but let's just assume there were. The value of all the Doge coins is 300K because 0.002 cents. Now it's 85 million, which isn't that much. I was thinking it was going to be more. Doge. It says it's markup 20. It says the volume is 800 million. Why did that website say 150 million? Oh, it says 150 billion. Which doesn't. I wonder why it's different than this website. Volume 812 million. And this says 150 billion. I'll just use Yahoo Finance because I don't know what's. Doesn't make sense. Previous close 17 cents. So right now it's 18 cents. I can't figure this out. Wish there was an easier way to figure it out. $812 million volume, circulating supply 150 billion. Okay. Oh, I guess volume is the daily volume traded. So 150 billion is accurate. Okay, let's go back to that. 150 billion. So the value is 27 billion. Okay. So my point is, like say you had the time machine and you went back to the past to 2018 and Doge was 0.02 cents each. And let's say you bought 150 billion Dogecoin. You maxed it out. At that point, you would need $300 million to do it. Obviously, I'm going to assume that you made other trades to get to 300 million because you had that time machine. So you're up to 300 million in value in Doge. Everything's in Doge. Then in 2021, Doge hits the peak when Elon goes on SNL at 57 cents. And your 150 billion is now worth 85 billion. And let's say you sell it. You sell the 85 billion and then you figure out my point is like, so if you have that time machine, it would not, the problem is it wouldn't go to 57 cents because you own it all. And the reason stocks generally move is because of supply and demand. So if one person just owns everything, then nobody cares about it actually. There's really no benefit for anybody else. So everybody else, I mean, it will go up, probably. Actually, I don't even know if Doge would go up. A real company would go up. that sells a product, but I'm not sure about Doge. So maybe volume is at the amount. Yeah, thanks for. Would you invest in companies? So that's probably a bad example, because let's just say you had the time machine. I'm just trying to prove a point why you can't really become a trillionaire, even if you had the time machine, because your trades dictate the market. So let's do like a normal one. I mean, you could 100% become a billionaire, very easily become a billionaire, but I would think after like maybe even a few hundred billion. Let's see. Okay. So this is a good one, because I don't want to pick an Amazon because you have to wait so long. I mean, to become a trillionaire, you can't wait 25 years to get that and then wait another 25 years. You'll be dead. So you have to kind of get these jumps and spurts. So let's just say, and NVIDIA is a good one because that jumped real fast. So let's say you got it in 2020 at $7. So you got in 2020 at $7. And I'm going to do the same scenario. Come on. Why is this? Okay. So it's worth 3.5 trillion. So there's 500 million shares outstanding in 2020. And I know the shares change, but just let's keep it simple and just assume it's 500 million. Chart. So the peak was actually at the end of 2024. It was 148. So you'd have to accumulate oh no, that's not right, because I gotta fix this. Oh boy, I know what I did. What's going on? Okay, so this is accurate. So because that's 23 billion shares outstanding today. So let's just assume it's also 23 billion outstanding in 2020. It was $7 a share, 23 billion shares outstanding. So the market cap was 165 billion. So say you knew that because you had the time machine. And let's just keep it simple. The shares outstanding didn't change, which we know they did, but it's negligible. So then the price per share goes from 7 to 148. Same shares outstanding. So now the market cap is 3.5 trillion. So that's how you become a trillionaire, right? But the thing is, you can't buy all the shares. It would influence the market too much. Like now we know how NVIDIA did based on reality. But if you were buying like 10, 20, 30% of a company, you would influence the market too much. So you can't rely on what you know of the future. I mean, you do know Nvidia will become a great company, but that's the thing. Like, I don't know if you can become a trillionaire. What do you guys think? Can you become a trillionaire knowing? I don't know. But one person who could have become the first trillionaire a long time ago was Bill Gates, because Bill Gates initially owned half of Microsoft. Um, and over the years, he has given a lot away. He has um, like his charity fund he gives away, and he sold shares throughout the years. But if he never sold any shares, he would have been a trillionaire, whatever, 10, 15 years ago. He would have been the first trillionaire. And he would have been, because his company would have done just as well, whether he sold shares or not. It's interesting. I don't know. I find this stuff interesting. But let's talk about something better. Yeah, I've been away, like it's been like 3 weeks since I did a video, and life is rough. There's always this crap going on, stress, and sometimes you need a break. Um, but what was it? Okay. I definitely made some mistakes in my main portfolio, and I'm a little annoyed about it, but you're never happy, right? Um, I keep looking back. So I bought, I'm so stupid. I bought Lumen because Lumen put was getting contracts with all the big companies, because Lumen is like it's kind of an old uh telephone company. They use old products, and they're not using the latest 5G stuff, but they are trying to get into that. So they had many relationships with Amazon, Google, Meta, to help them with their data centers. So I dropped 20K into them, and it was down 59%. I don't care about Mister. It's just an option trade. I put 3,000 in. When you play options, I'm just it's just fun. It was just a gamble. Bitcoin was 100K, right? So I bought puts on Mister, because Mister uses convertible debt. They issue convertible debt, and they use the funds from that debt to buy Bitcoin, and that's all they do. So when Bitcoin hit 100K, I bought Mister, and I was actually up at one point, but because when Bitcoin came down to like 60K, but now it's back up. So I lost my entire investment, but I don't really care about that. Lumen, I don't. I'm a little annoyed. I probably timed it wrong, but I timed Facebook wrong too. It says I'm up 170%, but I bought Facebook in my retirement at 150 a share. Like I bought um I bought Facebook at 150 a share in my retirement, and it was like 40K worth. So yeah, so I guess 267 shares. What's it at now? It's like 700, right? Or 680? So a share is pretty much 700. So in 2017, of course, I'm not happy, because in 2017 I bought 267 shares in my retirement account, and current price So my value is 186K. So obviously I'm happy. I and, and yeah, sheesh. In 2017, I spent about 40K in my retirement. I bought 267 shares of Facebook. So I'm up a pretty good amount, right? Well, close to 300%. And that was my value is no, where is it? It says it's 459K my value because I bought more. Like when I sold my business in 2021, I dropped another 100K, but it was 315 a share when I bought it. Jeez, what's going on? What am I doing wrong? I don't know how to do math anymore. It's this keyboard. It's so sticky. It's hard to like. Okay. I paid more money. Okay. These are off the top of my head. I'm sure I'm off by a few dollars, but so in 2017, I bought 267 shares of Meta. It's so sticky, this keyboard. But this keyboard is part of the computer, like it's connected to the computer. I mean, I could get a separate keyboard, but it's just convenient. So in 2017, I bought Meta was trading at 150. I bought 267 shares from my retirement account. So I dropped 40K into the company. And now it's 698 a share. So the value of these 267 shares is 186K. So my gain is 365%. That's in my retirement account, but I have a brokerage account. So when I sold my company in 2021, it was 315 a share. And the reason I bought it, I sold my company in 2021. I bought it I remember buying it in January 2022 because it peaked at 365 at the end of 2021. So it peaked at 365. So I'm like, okay, it's down 15% from the peak. So I picked it up at 315 a share, got 317 shares. I bought 100K worth, and I was down 70% after 3-4 months because it got down to like 89. Of course, I didn't buy more because I was so I was so much involved into the stock. I mean, of course, now I'm like, I should have just put it all into, but who knew? So I'm only up 122% on this particular trade, but 365% on this. So my combined for Meta is 170%. Is that how close is that? I mean, I'm just going off estimates in my head. 407. This is 459. But I did pick up more Meta. Like every every now and then I pick up a share or two because I have extra dividends left over. But it would be so easy to just, oh yeah, like my initial strategy when I opened up this retirement account was well, the only reason I opened it up is because I had a 401k at my job. So I didn't actually have a retirement account. I did have a little in a Roth, but most of my money was tied up into my 401k. So I didn't really control that, so to speak. But then I quit my job, opened up a business, and eventually rolled it over into an IRA. And I was in 2017. And my strategy was just only buy Meta. Well, it wasn't even Meta back then, it was Facebook. So I was like, only Facebook. Just put everything I have into Facebook. Of course, I didn't follow my strategy. If I did, I probably have 10 million now. But whatever. It's so easy to look back, right? Mountain Finance, what's up? Okay, let's go through the comments. Sorry, I'm just babbling. If you were a trillionaire, you can influence inflation by yourself. You can influence a lot by yourself, being a trillionaire. So it's like the back. If you watch Back to the Future Part 2, right? That's when Biff goes back. Part one. Wait, part one was Michael J. Fox goes back to 1965, and make sure his parents stay together, right? Part two was when Biff sees Michael J. Fox in a time machine, and then he buys the gambling book and goes back and gives it to himself. But the thing is, things don't play out. If you were able to go back to the past, things wouldn't play out like they normally would, because you would influence the future, sometimes for the worse. Obviously, if somebody, like, if you were born like in the 1980s or something, and then if you went back to the past and disrupted your parents from meeting, like you found a way to not get them to meet, then you would never be born, right? But why did he go back? Why did he have to change his? Because his parents did meet and he was born. But what happened? Why did he have to? Did he? I think he messed up, and when he went back to the past, right? He went back to the past, and his father was like a nerd, and his mother wasn't really interested in his father. The mother was interested in him, so he had to adjust that, right? That's a great movie. That's one of the few sequels that are better than Back to the Future 2 is a great movie. I like it better than the first one. And the first one was amazing movie. I remember in the theaters watching Back to the Future 1, and at the end they talk about Back to the Future 2. And I was just like, I couldn't wait for it to come out. That was a really good movie. Okay. I won't ban you, AB Ba. I won't I won't suppress your comments, because I don't like doing that. Unless you cursed and made fun of people, I would. But would you hold Apple? I'm not a big fan of Apple. as an investment. I just I think it's an amazing company, one of the best. But in terms of a long-term investment, I probably would hold it if I had it, but I don't think I would invest more into it. And I would consider trimming my Apple, but I don't have that much Apple to begin with, so there's not much trimming needed. I only have like 38,000 Apple. But I did have Apple. I bought Apple in 2000 2011 or 12. Of course, I didn't have a lot of money. Even when I was 30, I didn't have that much money. So I only had, I had more than $1,500, but I mean, I couldn't just put 80% of my investments. So I had $1,500 and it 10x'd, which was nice. So it turned into 15,000. And I did sell it. It was around COVID. I wish I didn't, because that 15,000 would have turned into like 50,000. So let's go back to the comments. Shit, I gotta go. I drink a lot of water. I'll be right back. Okay, so let's look at some tickers to learn about these companies. I might have missed some comments. Okay, my Roth is up 5.4% year to date. So Ed, A to Z, if you're up 5.4%, I mean, just look at S&P 500 up 2%. You're doubling, more than doubling that. That's good. I mean, that's kind of the benchmark. I mean, you always want to be as high as possible, but that's a really good benchmark. I mean, because you could put all your money into an index, either S&P, the Dow, if you're in Europe, the FTSE, or wherever you are. Even if you're in Europe, you could put it in. Most countries can invest in U.S. indexes. So do you like NVO? I think my eyes are getting worse. It's harder to see these freaking screens. Oh, that helps. It made it bigger. God, This computer is getting so old. I got it in 2020. The only reason I got this computer is because my old computer wasn't really good for editing and like and also like doing high level things because it wasn't really fast. This computer in 2020 is $4,500, and boy, did it make a difference for how long it took to. But now it's starting to get slow. Let's just go through it. Okay, TDW. TDW, Tidewater, LVMUY. Okay, that's on the pink sheets, but that's one of the biggest companies in the world. Louis Vuitton, Moët Hennessy, and MOS, the Mosaic Company. Obviously, I can't really go through. Would you invest in companies while they're still private? I mean, how do you invest in companies that are private? I mean, I know how to, but I mean, it's not that easy. Um, I did invest. What's it called? What's that website called? Um, there's a bunch of websites where you could invest in private companies. Of course, I can't think of the name. Okay, invest in private. Sheesh. Let's see. Yield Street, Start Engine, Hive, Investopedia, Morgan Stanley, Micro Start Engine. It has a catchy name. Micro Nerd Wallet, SoFi Republic. Start Engine, Yield Street, Hive, Equities End, Fundrise. I can't remember. There's a company that I bought. It was just $500 on two private companies. But I don't think you'd be as rich as you think you'd get, even if they go public. People think if I invest in a company early on, I become a billionaire. Um, but chances are, if a company like Facebook, you wouldn't even have access to it, to investing in it. I can't remember the name of the website. What's it called when you invest? Well, there's a name for a type of investor that invests in private companies. They're called um, investors who invest in private companies. Venture capitalists. That's one name. Did somebody say it? Yeah, venture capitalists. Can't remember the name of the. Let me open up my tax folder. I got to put it down here so you can't see it. Taxes, personal taxes. Bell Tower Fund. Angel list, angel investor. That's what I'm thinking of. Okay. Angel investors. Actually, the name of the website is angel.co. Maybe not. Um, but Bell Tower. I guess they were acquired by Bell Tower, but it was Angel. It used to be, I'm pretty sure it was angel.co, but that doesn't come up. Um, yeah, you get a K1. It's same thing as if you invest in an MLP like E-Trade, you get a K1 because you're not a shareholder. You're you're not a stockholder. You own. It's like if you have a private business with a friend. It's the same kind of deal. You own part of the business, not as a stockholder, more as a angel list. Yeah, a K1 um is like a pass. Companies that issue K1s are like pass through entities. They don't pay taxes on corporate profits. They pass through all the funds to the owners of the company, and the owners of the company pay taxes. Usually, when you get a K1, like from E-Trade, I mean um from what's it called? It's hard to remember things sometimes when a screen is staring you in the face. From ET, I say E-Trade, energy transfer. If you get a K1 from an MLP like energy transfer, uh, they do not pay taxes on the operating profits. Energy transfer does not pay taxes on those profits. They pass through the funds to you, the owner of the company, and you pay taxes on your personal tax return. So they avoid double taxation. I guess Bell Tower acquired this company, but it seems like there's so many of these companies, and it seems like you just put money in and nothing ever comes of it. So I know the idea is like, oh my God, I could just drop a couple $1,000 into this private company and then become a billionaire in 10 years. Pretty much never happens. And even if you did put money into a private company, you're probably not going to put that much money into it. Say you put 1,000. Um, After like so many rounds of dilution, it's not you probably wouldn't end up with that much. Maybe like 100,000 max, which is a very rare instance. 99% of the time, you end up with nothing because it never evolves to anything significant. Bell Tower is one of. I wonder why they don't list the investments in Bell Tower. It would be good to know. What if people want to invest? So I invested in two companies, $500 each. Nothing came of it. I just get a K1 each year telling me how much money it's worth, my $500, which is usually nothing. Angel list. Yeah, I don't even know what the hell this is. I don't even see any. I'm not saying there's something shady going on with these private companies, but it generally just doesn't lead to much. Maybe I would invest in a private company if I knew the owner, like it was in my neighborhood or I was a family member. But even then, a lot of times people, I don't think people are like, most people aren't doing things illegal or unethical. Most people aren't. Some are, of course, but most people I think are trying to run a successful business. It's just hard. It's just, it's a grind. And generally, it doesn't lead to much. Because to grow a business and scale it to like where you'd actually make real money, it's just extremely unlikely. It's kind of like buying a lottery ticket. It's not that much higher chance. There's so many companies trying to make it. But yes, I have tried it, and nothing really came of it. Because I just wanted to learn, see the process. Has anybody like that? Has anybody used those crowdfunding sites? Crowdfunding, Kickstarter is one, but there's others that are GoFundMe, but that's just really donations, right? You don't really get anything out of it. I did like put a few thousand into this crowdfunding site. Okay, invest in. Damn it! I'm trying to find this Prosper. So I did that for a few years. I wonder if. Let me see if I could sign into my Prosper account. Come on. So I did Prosper. I don't know. Have you guys done similar? I took most of my money out of it. So the purpose of the website is you loan money to people who need money for certain things. It's mainly to, I think it's mainly to individuals, not businesses. And I like the idea of it. Okay, so it's a personal loan. So you can get a personal loan between $2,000 and $50,000. And you could do whatever you want with the loan. You do have to prove to Prosper some, you have to prove who you are. You have to give some background. Like all your personal information doesn't go to like your investors, just to Prosper. So you have to prove it's a legit loan. You're not just trying to scam people out of money. So say you need $10,000 because you need to put a new roof on your home, or maybe you need a wedding to pay for a wedding. It could be anything. And the bank route, maybe you don't want to do it, or the bank is not lending you money. So you go to Prosper, and then you ask for a $10,000 loan. You provide all your credentials to Prosper to prove you're a real person. These are popular reasons people get loans from Prosper. Debt consolidation, like they had lots of credit cards, they just want that one place to send money. Home improvements, healthcare, household expenses, vehicle purchases. So if somebody wants a new vehicle, they'll go through Prosper. I thought it was a really interesting You're currently enrolled into. So I don't want to enroll. I want to see loans. Oh, investing with Prosper. So there's $28 billion of loans invested. I did this for a couple of years. Um, 103 that's Staten Island where I grew up. Choose your account. Okay, see, I just want to see the loans. I don't want to like. Yeah, I don't know. I wanted to show you the profiles. I don't know why it's so hard to figure out. Well, if you did want to invest in Prosper, there's just a lot of people have their profile saying, "Oh, I need a car," and they explain it in the profile why they need it. And then there's a credit score that Prosper applies based on their FICO and all the information they receive. So sometimes you would receive like a 6% interest rate on that loan if the person had really high credit quality. Sometimes up to like 25%. But a lot of people default on the loans. So if you build that in, I wasn't getting that good of a return. It was only like 2-3% because of all the people who weren't able to pay in full. Let's see. Okay, volume is that day amount traded, not the total. I bought 10 shares in the Circle IPO on Thursday. The Circle IPO. I mean, it's up a lot. I mean, it started out in the 30s. I bet you didn't get it at that low of a price. The problem with a lot of IPOs is that nobody really gets at these levels unless you're an insider or an investment bank. Because by the time, like an IPO on 6.5, so by the time you have even a chance to buy, it's already at 92 before it's even open to the general public. But you still could have done well in this stock. It's because it hit 115. It's going to go down. That's just generally how these things work. There's usually a surge because a lot of excitement, and then there's a big pullback, and then depends how long the pullback lasts is indicative of how the company is are they profitable, what's the future like, market sentiment, things like that. But I bought Facebook at IPO at $40 the very first day I could buy it, even though it opened like 25. I didn't have a chance to buy it. I bought it as soon as it opened at 40, and it took 6 months to get back to 40 because it came way down to like 20. Of course, I wish I never sold it. I didn't actually sell it. I was selling covered calls, just picking up a few $100s every month on the premium, and then it got called away. I see your point. Maybe the solution here is leverage. Of course, it would ruin if you mess up. Leverage? What do you mean? Without mistakes, we would never learn anything. yeah, I mean, that's the best way to learn mistakes. As long as it doesn't kill you, a mistake, as long as it doesn't bankrupt you, um, you, hopefully you learn from it. If you don't learn from your mistakes, then you're kind of wasting it. Because that's like on a job too. Like I learned so much when things blow up, because you'll never forget it ever again. Um, what mistakes did you make inside your portfolio? I mean, I made a ton of mistakes. I remember I invested a lot into um what was it called? U- UTO, SCO, UCO. Yeah, I invested a lot into UCO when oil was low, and I didn't realize how it worked, and I lost a ton of money because I didn't realize uh they just roll options, um and all the decay risk. In the long run, you can't make money on these stocks. You can see like it was they do so many reverse stock splits. It was 5,000 an IPO, and there's always run ups for a few months. And if you happen to catch it at the right time, you can double, triple your money. But generally, it's just downhill. That was probably a bad investment. These leveraged ETFs, you really gotta. It's short term only. You can't hold them long term. You just can't make money. Mathematically, they just have to go down if you understand the math behind it. And it's hard to understand how could a stock automatically go down, but it has to in the long run. In the short run, it could actually go up over a year or two, but in the long run, it has to go down. Check out Lyra, was a penny stock till recently. Lyra Therapeutics, 32 million market cap. So it started out at 778. I mean, I'm sure. I mean, it is a penny stock. They just did a reverse stock split to bring it back up over a penny. It's not like you would have made. I guess you would have made a ton of money if it did have a. They must have gotten approval. These therapeutical companies, they get FDA approval when they pass one of the phases of the trials, and usually stock goes up a lot. So yeah, it was only $5 in May 30th, and then it went up to 26. But it's gonna come back down. These things don't. I mean, 24 million, 32 million market cap. It's kind of a. They probably have no sales either. Yeah, 1 million in sales, and it's pretty much hasn't even gone up since 2022. It's gone down. They just got approval. Yeah, they passed phase 3 trials. That's what happens with these therapeutical companies. They just languish or go down for like months and years, and then once they pass a phase, whether it's phase 1, 2, or 3, the stock goes way up. But they didn't actually sell anything, because passing phase 3 doesn't mean you make any money. You're just getting closer to monetizing. You still have to manufacture the drug and market it, but a lot of these companies just sell off the drugs to a bigger, like a Johnson and Johnson. They don't sit on the drug and try to make money off of it. Did you buy any Yield Max? No, I never bought Yield Max. I mean, I'm not too familiar with the purpose of it. it's just another leveraged, like you could buy yield max on Master, Tesla, Coinbase. I mean, I'm sure you could have made a lot of money on, let's see. So it came out of 26, it went up to 44, and it hasn't gotten even that close since. Now it's trading at its all-time low. But you would think with Bitcoin going up so much, yield max would have done well, right? That's the thing with leveraged funds, is that they the decay risk eats away at all the profits, and you just even if you look at, like, even if Bitcoin was up 50% for the year, this stock is down, or maybe up 5%. TSSI. Another small company. Is that another therapeutical company? TSS Inc. Why is it doing so well? So yeah, their revenue looks good. They gauge deployment for fresh. So they're a tech company, PSS. Looks pretty interesting. Really good revenue growth. Lyra Therapeutics. No, that's the wrong company. TSS stock. They've done pretty well. Shares of TSS have gained 32% since reporting results in first quarter. Company compares to S&P over the past month. The stock has surged 74% for the first quarter. Pretty good numbers. Could be a winner, right? Hive, Forge Global, and Nasdaq Private Markets. Angel investors, credit investor, angel. Limited partnership business, you have to distribute income. Right. MLP, you have to distribute at least 90% of your income to your investors. Most of that is dividends. I use Forge Global Crunchbase to see private company data, by the way. HIMS seems like a meme stock, right? But it's done pretty well. It's buff. It was a SPAC, right? It started at $10. Most SPACs don't really go anywhere. And then up until mid 2024, it really hasn't moved. It did come down quite a bit. You could have got it for under $4, which would have been really amazing. And look at that surge up to 56. I don't know about on a long-term basis if it's a good investment. I mean, it looks really good revenue-wise, and they are profitable. They are profitable. So looks like could be a good looks like could be a good Yeah, telehealth it's a pretty it's an interesting business because they're getting into women's products as well, not just men's, even though it's called Hims. I did buy the spray for my hair. I'm not sure if it worked. I think it might have worked, but it made my scalp really dry. And it's kind of annoying. So I like it was like real flaky, my scalp. So I did it for like a year. Hims announced it would add compounded. I think, yeah, I think there's a lot of opportunity in telehealth. My biggest regret is Palantir because I owned it. I don't care if, not that I don't care, but if I never bought a stock, like I was thinking of buying a stock and it went up a lot, I'm annoyed, but when I own a stock and I sell it and it goes up a ton, I'm just scared to look how much money I invested in it initially. Because I want to put like I can't put like $1 million into a stock. Like I just don't have that much. Can't put all my money into one stock. But like if I did have 50K to put in, I could have turned that into 500,000. But I don't think I would have put that much into this company. Yeah, I don't think I would have had that much faith. Like I would put 50K into like a company like Meta or a stable company that I feel a little comfortable about. Even like what's another company that's not too massive, like a Home Depot maybe. But it's a little concerning. But I had it at $20 a share, and then I ended up losing money. I sold it at like 15. I mean, it came down to like, look how low it came down to. When it came down, I felt good. I was like, okay, it's coming down. I feel satisfied that I sold it. But it is painful when you, now that it's surged so much. Okay, so it looks like at the end of 2023 was the real bottom, $6, which would have been, now it's what, 130. So you could have 20x'd. But even at the time, like we don't have time machines, but even at the time, if I told you Palantir, it's under it's $6, and I think there's a chance it's going to blow up. I mean, how much can you possibly put in? Even if you had, say, you had $100,000 to your name, because you would 20x your investment, whatever you put in, assuming you held it. That's another thing. Like not. So that's your return, 2,000%. So even if you had $100,000 to your name in terms of investing, say you had your home or whatever, cash, but that's your kind of investing. You're obviously not going to put it all into it, because if you always put 100% of your investment into a stock, eventually you're going to have nothing, because not every stock, even if you keep picking winner after winner after winner, if you just pick one loser, it gets all wiped out. So how much can you possibly put into it? So 10,000, I guess, would be like the kind of the max, 10%, which is pretty good amount of your portfolio. So even if you did put 10% into it, when it was 6, right? Of course, it doesn't load now. I mean, and say, and after like, I mean, it would be going up and down. It wouldn't be like a straight line up. So there'd be some points when you'd actually be down your investment. But say when it went up to $20, there's a decent chance you would have sold it because you're 300% return. Is it doing that? Oh, it's hard to do. If you had 10,000, be 30,000. So it's just hard to sit on it for like so many years, especially if you need money. I mean, obviously, in hindsight, it's better to wait. But even now, what if you sold it now and then I showed you in 3 years from now it's $1,000 a share? Because that happens a lot. Like with companies like Microsoft, if you put $10,000 into Microsoft at one point, like say you did it in like the year 2000, like so your 10,000 in like 2010 would be 100,000, and you'd probably sell it, not realizing you could have turned into 20 million. So it's just like yeah, I do. I watch videos on earwax removal. I've seen a few videos like that. It is interesting. Um, I have a friend who works at a private crypto firm, and I asked to just buy some of his shares, but he's too smart, waiting for the IPO. Yeah, but it's like a lot of people said, like, I wish I would have known to invest in like Amazon, but almost nobody would hold it for 25, 30 years. It's just too hard. They would sell most of it. Because imagine turning like 10,000 into a couple million. You would think that's it. You can't beat that. But if you would have waited, that 2 million would have been 7 million. That 7 million would have been 15 million. That's why I just hold. Don't sell unless you need money for like an operation or to buy a new home. But that's how you make big money if you happen to work at a company and you get equity in the company and then they go public. But usually you're not given like these penny stocks. I bought a lot of penny stocks in my life and I've never really made any money with it. Just almost all the time it goes zero. I've never it never amounted to anything. Like I've never had a penny stock that I sold after a few years that ended up becoming like a massive company. Um, that would have been a nightmare if I did do that. Well, okay. Well, it was good to do a live stream again, I guess. It's been a while. Well, maybe I'll do another one sometime in the future. So thanks for joining. Do you think stock market will pump after the big, beautiful Bill Prince? I'm just saying, just keep investing in the market. Don't worry about all the noise. It's going to go up. The economy isn't broken. I don't know why people think it's in bad shape. Just you just have to buy and hold. Don't buy garbage companies. That's all you can do. You can always hear. I've been hearing this for over 20 years that it's going to crash. It's going to be worse than the Great Depression, and it just doesn't make any sense. But okay, yep. Thanks a lot. Good talking, and I'll talk to you later.